Welcome to Game Trader Live. This is a show where we look at the stock market broadly, look at individual stocks, we look at stock charts, but we also look at the fundamentals of the company. It's an educational show just for training people on how to trade or how to invest, or maybe just show you how I think about stocks. I've been investing in individual stocks for almost 18 years. I've been managing a portfolio, and I've had some success picking individual stocks. So if you don't think my advice is worth listening to, you can tune out here. But I can assure you that I have thought long and hard about what I'm going to tell you today. That's a lie. I have had very little time to prepare. The Shacknews office had a flood yesterday, so it's taken up most of my time today. But yeah, let's talk about the broader markets, and then we'll get into individual stocks. And if you have any questions at the end, we will talk about whatever you want to talk about. So it is the end of the quarter. The first 3 months of the year have come to an end as of right now. That's why we're doing the episode. So this show will always take place on the final trading day of the month, because that's when I can give you the most valuable technical analysis information about the future. We'll get to Nintendo here, Donovan, but I'm going to look at the markets first, because I think it's kind of important to look at the market setup and then look at Nintendo. But yeah, we'll look at some individual stocks like Nvidia, Nintendo, Tesla, Apple, Ubisoft, usual suspects here on the Game Trader coverage universe. But yeah, I want to point out something here. We had an outside quarter in the S&P 500. That means that it hit a new high during the quarter, and it took out last quarter's low. So last quarter, the high was 609.07. We're looking at SPY. This is the ETF for the S&P 500. And the low was 565.27. We broke above that earlier this quarter, hit an all-time high of 613.23, only to reverse all the way down through this previous bar, hitting a low of 546.87. So this is a good example of what is called an outside bar. When an outside bar happens, it's quite the opposite of equilibrium. It's the neither side could be contained. So you have an instant broadening formation. So this is a series of uptrends and downtrends. There's a downtrend here, and there's an uptrend here. So now going forward in this next quarter, one of four things could happen. It could break out higher, which would be a buy signal above 613.23. It could break down lower, which would be a sell signal below 546.87. It could stay inside and just kind of chop up inside of this range. Or it could take out both sides like this did. So if we have another outside quarter, that would be kind of crazy. But it's not, anything's possible. So those are the four possible outcomes. So if you want to get short this, you're shorting it on the quarterly sell signal below 546.87. And if you want to buy this on the quarterly chart, you're looking for 613.23. And those would be the stop prices for your trades also. But yeah, pretty important to call out the outside quarter. You had a outside quarter followed by a breakout to the upside only to be reversed. Sorry, this is the monthly chart now. You had an outside month in January only to come back inside that range and then break down below it. So you had a breakdown below this downtrend. And we currently are still sitting below that downtrend on the monthly chart. That's an interesting thing about this technical analysis strategy that I use. You can use it on any time frame, and it's important to look at multiple time frames. But right now, you have an S&P 500 that's down for the year. It's down for the quarter. It was down on the month. The weekly chart is different. It's up on the week. It was up on the day, after being down earlier in the day. So I guess my point is, there's more reasons to be bearish than there are bullish here. just from the chart. So on the monthly chart, it's that same level, that 546.87, which was this month's low, but it was also the quarter's low. So that's why time frame continuity is something to pay attention to here. Outside quarter to the downside, and the continuation of an outside month to the downside. Or actually reverse back in and then down. So yeah, not good news if you own the S&P 500 or one of the 500 stocks in the S&P 500, or one of the many IRA or retirement funds that also mimic the S&P 500 in their holdings. The Dow Jones is looking a little different. You had a straight up inside month and down buy or sell signal that did go into effect last month below 431.02. This is the DIA, Dow Jones Industrial Average ETF that I'm looking at. But yeah, you're down about $10 below that sell signal, but it's already happened. Let's look at the quarterly chart. Did not go outside month. Just broke down to the downside. So yeah, momentum is not there. It's going down right now. But yeah, you have a Dow Jones that's inside year still. It's down on the year. It's down on the quarter. It was down on the month. This is the end of the month. It's up so far on the week, and it's up so far on the day. So it was the last day of the month. We saw a little bit of reversal of those monthly trends and those quarterly trends that I've been pointing out here. I don't really recommend anyone own the Dow Jones. It's 30 stocks. I don't really think it's that important anymore. I guess at one point it was trying to be a predictive indicator, like a leading indicator of the economy. I just don't know about the components in there anymore. So I would avoid the Dow Jones. Actually, just to give you guys a frame of reference, I can look up what's in the Dow. The Dow 30, it's Amazon, American Express, Amgen, Apple, this is alphabetical order, Boeing, Caterpillar, Cisco Systems, Chevron, Goldman Sachs, Home Depot, Honeywell, IBM, Johnson & Johnson, Coca-Cola, JP Morgan Chase, McDonald's, 3M, Merck, Microsoft, Nike, Procter & Gamble, Sherwin-Williams, Travelers, United Health Group, Salesforce, Nvidia, Verizon, Visa, Walmart, and Walt Disney Company. So I'm not saying that all those are bad. How will the news out of Japan, China, and South Korea impact it? What do you mean by it? I mean, this is an escalation of the trade war. I think it's pretty interesting that China, Japan, and South Korea are unifying. I think the tariffs are flat out bad for all economies. We're in a trade war, and the president of the United States is escalating the trade war. And if he's really religious about these reciprocal tariffs, I think there's meaningful downside to every stock and every index. So yeah, you want to know what the downside is for the Dow Jones? Like, I don't know. It bottomed here in 2009 at 6,478, 64.78 here. I would just zoom out and look at any chart scanner, and I would say that this is not a time to be a hero in the market. This is a time to put together a shopping list so that when the markets become irrationally priced, you have money on hand to take advantage of that. I just don't think we're even close to that moment right now. The escalating trade war with Canada is concerning as well. But yeah, it's hey Lucci. I just listed off all those stocks that are in the Dow 30. Most of those companies are multinational, right, where they do business overseas. So if the cost of doing business overseas is going up and the cost of importing is going up, margins are about to go down, which means profitability will go down. And once profitability goes down, the capital expenditures will go down, and then you'll start to really see the economy roll over. We grew at a very slow 0.3% rate based on some analysts' reports that I just saw. So I'm not, I don't know where the hell that's coming from, but I tried to turn off all my phones before the stream, but it just does it anyway. Oh, I gotta pay everybody. So yeah, I guess to answer your question without fully understanding where things are going, right? We don't know. Man, I have 3 phones right now, Lucci. I'm looking like a drug dealer here. It's like I got this one, and I got this one, and I got this one. Well, Scanner, if you had to upload things to as many places as I do on social media, you'd have more than one phone. This idea of having 3 phones is stupid. I don't like it. But I do, I just switched over. I finally switched over to a new iPhone. The one I upgraded from was the 14 Pro, and its battery was god-awful. It was really starting to be bad. So yeah, I finally did it. So tonight's weather report will be filmed on a new camera. Sorry guys, my tea is the perfect temperature to drink, and I was in a flooded office earlier today, so I'm just I need the green tea to soothe my soul. Especially after the bill I'm gonna get for repairing that office. Let's see what else is going on. So yeah, back to the broader markets. That's the Dow. You got an outside quarter to pay attention to. Not an outside quarter. That's in the S&P 500. So just watch the low of the quarter here is 407.25. That would be a continuation of the selling momentum. Oh yeah, dude. Our water heater blew up and was shooting water all over the office for maybe up to 5 days. I don't really go there enough. I work from home. So yeah, I'm lucky that I caught it when I did, because it hadn't. There's like a corner of the office that's affected, but the whole closet for the water heater is needs to be gutted. I never had a BlackBerry. Look at this thumb, Lucci. This thumb covers up 9 BlackBerry buttons at one time. And that's why I don't have a BlackBerry. Hey, Danny. We're looking at the Dow Jones right now, but we're also looking at my thumb. But yeah, let's go to the Qs, the NASDAQ 100. We did have an outside quarter here where we took out last quarter's high just barely. Last quarter's high was 539.15. This high is 540.81, and then we broke down all the way below last quarter's low of 477.40. This is the NASDAQ 100 ETF, the Qs as they call it. So you have an instant new broadening formation. We're definitely closer to the lows than we are the highs of this situation. So a breakdown below 457.33 per share would be a sell signal valid for the entire quarter. So we're talking like, this isn't just a month or a week. This is 3 months of information I'm giving you here. Now, it could stay inside that range. I talked about the 4 possible outcomes already. But that looks like the most likely outcome right now. But I'm not in the business of predicting anything. I'm just telling you what to do when things happen, how to respond to information once we learn it. Yeah, that's an outside month and down sell signal right here. And so yeah, you're just gonna look for a continuation, but below the 457.33 price level. Nasdaq is not up on the week or the day yet, like the other markets, because Tesla's really dragging it down. If we're being honest, which is more than we can expect out of Elon Musk. Let's look at the Russell. This is the Russell 2000. Oof, that is an ugly looking chart. Let's see the quarterly chart. Yeesh, that's not good. That's almost a double top. It tried to hit a new all-time high and it sold off intensely. It's down on the year, but it's also trading inside year. So we'll see if it breaks down below this low. We could get a lot more pain. The iShares Russell 2000 Index. This is smaller companies. So these are like not the $10 billion companies, but more like $5 billion and under. They call it the small caps as opposed to the large caps. But now there's like ultra mega large caps too. So it's hard to just look at this in a vacuum. But yeah, these are the smaller companies, and they are struggling as well. Nothing really to show you on the quarterly chart. The monthly chart's god awful. So you had a monthly reversal strategy attempt to the upside, and then you had an outside month to the downside. So that rev strat failed, and you had to get out of it at that month's high of 230.32 cents. It got slightly above that in February at 230.70 cents, only to crash all the way below it. So you had an outside bar, and then a breakdown below that outside bar. You have these downtrends that expand. If you can't hold on to a downtrend like this is usually what happens. My mentor would call that pukage. But yeah, so triangles want to expand, right? Either to the upside or the downside. The whole core of my trading philosophy and my technical analysis philosophy is that stocks trade in a series of uptrends and downtrends. A lot of people will use, this line right here is what matters. It's like, no, there's a downtrend somewhere that you're looking at, or an uptrend somewhere that you're looking at, that in this case, there's a pretty long-term uptrend in the IWM that's been going on since 2009. So yeah, you had this moment back in 2020 where we broke down below it, but that's still a valuable uptrend to look at. So right around 185, you could see a bounce in the Russell. That's like $15 lower than here. But yeah, so I like to pay attention to uptrends and downtrends. It's undeniable these markets are still in uptrends. It's just that there are shorter term downtrends appearing. And just to go back to the S&P again, like yeah, that's an outside quarter, but look at the long run. We're still up quite a bit. I saw a lot of people being like, the market's crashed over the weekend. I'm like, it was down like 1%. that's not a crash. Also, look at where we're coming from. I like to use these long-term charts just to show folks at home, like, we're closer to the highs than we are the lows. But, it doesn't mean that we can't go higher. I'm not aggressive. I'm not short anything right now. I would rather, we can talk about my portfolio positioning in a bit. But yeah, I would rather just have cash on hand than try to short something. Because like I said, these moments of volatility that are being caused by the president and his tariff policies, they could be buying opportunities if things don't completely fall off a cliff. But that's a big if. So yeah, let's go through the Magnificent Seven. I don't know if I'm going to rank them again. Maybe I'll do that every other episode or something. I don't know. We'll see. Apple had a bad quarter for once. Stock's not completely falling apart. It is red on the year, but it's also trading inside year. You had a nice year last year. I would take caution if you're an Apple shareholder in any size here. Not a whole lot of signals for me to call out in Apple, so we're just going to move on. I would point out from a fundamental perspective that iPhones are not selling well, and I think Apple's kind of sending a signal to consumers and investors with their most recent launches of a iPad Air refresh, an iPhone 16e, which is the cheap model, the MacBook Air. Uh, I think Apple is seeing weakness in the consumer. We now have evidence of that. Walmart has reported since my last episode. Walmart had a revenue miss. They said they see the consumer weakening. Dollar Tree reported quarter, and they saw consumers weakening. A higher, more luxury brand, Lululemon. I know it's not like super luxury because they sell yoga underwear or whatever, but like they see weakness in the consumer. Uh, yeah, it's starting to show up. Uh, Nike reported a very weak quarter, seeing consumers starting to weaken. So what I'm getting at is it's possible that we're either in a recession already or entering one right now. Not to be a fearmonger, but if the trade war escalates, the stock market will continue to go down, and the economy will get worse, and more people will lose their jobs, and people will start to lose their homes and shit. I'm not cheering for that. I just think it's the outcome. I saw Goldman Sachs raise their probability of a recession this year from 20% to 35% over the weekend. So yeah. Amazon, nothing really on the quarter to call out other than it hit an all-time high and came back within the previous range. On the monthly chart, you had an outside month and down sell signal. So you're going to need below 184.40 for a continuation. It's down on the year. It does seem like a few of these tech stocks are trying to find a bottom here. I don't know how that'll work out. Amazon is pretty unique in that they basically own the internet with AWS. They surpassed Walmart in revenue during this quarter. So they now make more money per quarter than Walmart does. But yeah, they are going to be affected by tariffs. Namely, their merchants on the site will be affected by it. And if the consumer is falling off a cliff, Amazon might, Amazon benefits at times from recessions, but it also, instead of buying, rocket powered bidets, like you just start buying potato chips on Amazon instead. So revenue might be a concern at Amazon. Nothing crazy to call out on the chart, other than, down on the year, down on the month, down on the quarter. There's no reason to be a hero. But yeah, you would want, if you're looking to short this thing, a breakdown below this previous month, 180 and 25 might be the right way to go. Let's see, who's next on the Magnificent Seven? I might have to change the name of this because they're not very magnificent, if you ask me. I think it's Google. Google with a big old stinky outside quarter. I don't like this chart. I've watched The Big Short enough times to know I really got to worry when the girls down at the local adult bar are over leveraging their mortgages. I think there are a lot of leading indicators like that. I just look at my own personal purchasing habits. Obviously, I'm a little different, but I'm less likely to do DoorDash because it just costs so much. I try to only use it when I have to. I'm not interested in doing like any giant purchase like a car or anything this year. I was going to build a PC, but I'm not going to because prices are so out of control. So yeah, even someone with money, I'm holding back on spending. Yeah, I think it's a good point though to look at some anecdotal evidence of weakness in your own economy or around town or even in your state. All I know is going to war with Canada is really fucking dumb. And I hate to see how we're treating our neighbors. Let's see. We got Meta. Yeah, Meta. There's Meta. That's not a good looking. Yeah, this might be. You know, I don't know if I'd buy this stock. It looks kind of high. Yeah, you had a reverse. You had a single bar reversal followed by a sell-off underneath it. That's called a 2-bar. It's down on the year. Yeah, I don't know. I would stay away from it. Who was the other ones? Oh, yeah, Microsoft. Microsoft trading inside year. Had an inside quarter and down last quarter, so you had a sell signal below 405.57. Continuation of that would be below 367.24. Microsoft seems to be like ahead of the game when it comes to at least productizing AI. I don't know if all of its AI is great, but they are integrating it kind of across their ecosystem and their platforms. So they seem ahead of a lot of their competitors in the AI space. They are continuing to fumble every acquisition they made in the gaming space. But that doesn't really matter. This is a cloud services AI operating system company that happens to make a video game system. They don't even break out the profitability of Xbox. But yeah, they're gonna move with the market. I think the alpha that you got out of the last, let's see, 10 years, 15 years, from 09. Yeah, if you look at the last 16 years, stock went from 1487 up to 468. So yeah, I would caution people to get too excited here about Microsoft stock. Don't be a hero in any of these Magnificent Seven stocks. Who's the other one? Is there another one? There's always another one. I did Apple, Amazon, Google, Meta, Microsoft. Oh yeah, Nvidia. That's a hideous looking chart. So you had an inside bar followed by a breakout that went back inside. So this is a reversal strategy now. It was at one point a buy signal, but when it came back inside of it, I warned people, hey, this might be a rev strat to the downside. Well, guess what happened? We slightly broke above the high, right? It was 152.89. Last quarter, we hit 153.13, only to turn around and break down below that previous bar. So there is a sell signal in place here. You have a new downtrend to pay attention to. And yeah, this company is kind of at the heart of a lot of the tariff discussion, and also they're at the heart of the AI discussion. And depending on what day it is, people are more or less willing to invest in AI. Nvidia, I still think, is the best company in this group of 7 stocks. I saw it's trading at the lowest PE ratio it has in over a decade, if I read that correctly. So I'm going to do a little fundamental analysis on the side here. So yeah, you have a forward PE ratio of 24, trailing PE of 37, but they're still growing sales rapidly. Yeah. They're still growing sales rapidly. I think whenever this stock levels off, I don't know when it will, because it's in a precarious place. Below 103.65, you're going to have a sell signal that's valid for the rest of the quarter. And if the trade war escalates, Nvidia stock will go down. But really, in the long run, you have to ask yourself, are we at peak compute, or do you think we're going to need more compute power between now and I don't know when? I think we're going to need more compute based on all these AI chatbots, all these AI agents, all these robots that are being built. I think we're going to end up needing NVIDIA for a long time. So whenever it bottoms, wherever it is, I think it's probably worth buying. I own it lower than where it's currently trading, so I haven't been rushing in to increase my position or anything because I don't want to be a hero. I want evidence that the market's bottoming. Either Trump kind of walking away from these tariffs with his tail behind his legs or between his legs, or, you know, whatever. Like there's some sort of blowout, volatile moment where the markets collapse and you can buy NVIDIA for $70 or something. That's why I'm kind of saying, like, I'm not really telling people to short this market. I'm just saying if you have cash on hand, maybe hold on to it. Don't be a hero. And then last but actually least also, I don't even know if we should consider them part of the Magnificent Seven anymore. They're just kind of there. Tesla stock is in the shit. It is wow, it barely traded inside quarter. That's interesting. So now we have this big ass risk range to pay attention to. A breakout above 439.74 cents would be a buy signal. That seems unlikely. A sell signal would come into effect below 217 and 2 cents, which we're not that far from there. We're like a little, maybe $51 away from that. And the way this stock moves, it could be down there by the end of the week. So yeah, that's the Magnificent Seven right there. Like I said before, I would only buy NVIDIA. I own it, but I wouldn't buy it here. Just based on what the chart is setting up for. Let's let this market tell us when it's time to buy. I know that sounds crazy, but we need evidence of a bottom, either from news or the stocks themselves or an acquisition. We need the fundamentals to change. It doesn't look like the right time, TJ. I'll be honest with you. Like I'm not telling anyone to deploy capital really anywhere, except, you know, I might as well talk about it now because I know that's why most people watch this show. Let's talk about Nintendo. Yay. So Nintendo's quarterly chart, you had an outside quarter to the upside to end the year last year. It went from $11 all the way up to $15. Yeah, Nintendo's looking great. Yeah, Nintendo's up on the year, guys. It's up 17%. So S&P 500 is down 5% this year. Nintendo up 17% this year. NASDAQ 100 is down 8.4% this year. Nintendo is up 17.38% this year, 36%. NVIDIA is down 20% this year, 19.5%. Nintendo's up 17% this year. Tesla's down 35.96% this year. Nintendo up 17.36%. Are you getting it? Do you need more comparisons? Have I been clear enough with what's happening here? Man, what a great time to be a degenerate who put all of his money in Nintendo. I may be eating those words as soon as 2 days from now, but we'll see. I really have a lot of confidence in Nintendo. I'm going to talk about this company from a fundamental and a technical perspective. I will issue a statement about what I think about the stock after the Nintendo Direct that's happening on Wednesday. I don't feel like I should judge this company until I know exactly what they have up their sleeves, because this is a company that aims to surprise and delight their fans with unique and delightful experiences. I also remind myself that in our darkest days, in 2020, Nintendo stock was up 61% because they were there for us. They were there for us with Animal Crossing, with supply of their hardware, with that weird jump rope game. Like, they were there. And I feel like we're entering another period of uncertainty in the world. And Nintendo's going to be there for us again. Hopefully with great games and great experiences and, you know, maybe some weird Nintendo stuff. But, back to the short-term chart. This is set up so well. You had an outside bar to the upside, right? That's how we started this month. We had an outside bar in January. We went below the low. We went above the high. We then broke out above the high, and in doing so, set a new all-time high, right? We broke out of the previous all-time high. We're still above the previous all-time high, which was $16.51 per share. It got down to like $16.56 on March 10th on Mario Day. How dare they? And then it went to $16.80 today. Those might be buying opportunities, folks, because the monthly chart is setting us up for an inside buy signal or a sell signal. Below 1656, you have a sell signal in place. Hey, first time chatter, meet my ban hammer. I don't know, how do you ban? What is this? There we go. Wow, what did Twitch do to this thing? These mod tools are... Ugh. Anyway. Bells? I don't know why you invest in bells. Shack Pets is free. But anyway, so yeah, you have a buy signal above last month's high. Their username did look like a Bubbletron prompt. So we're going to have a buy signal above 1908 and a sell signal below 1656. So as I said before, 4 possible outcomes. We break out above, we break down below, we do both, have an outside bar, or we stay inside. Something tells me we're not staying inside another month. We're about to get news from Nintendo about a new system. This is usually the beginning of a hype cycle. We'll have to wait and see, right? But that's your risk range. Fundamentally, I think they're set up, man. They tanked their last year, and they're going to have enough supply of this thing just based on the timing of the release. Like, I think this system's going to be available and in people's hands by the end of June at the very latest. So that gives them 6 months to ramp before Christmas and get more software on the thing. So right now there's a little bit of conjecture, a little bit of why I'm staying long here. But, you know, you hold the stock for moments like this. And we'll see how the mainstream responds to it. If it's just another Switch, maybe the stock crashes, but maybe that's a buying opportunity. They just announced the Zelda movie's coming out in 2027. They got the Mario movie coming out in 2026. I think that this is just the beginning of a very interesting time for Nintendo, and I've mentioned it in previous episodes, but I still stand by this. Is Nintendo's stock being re-rated to not be viewed as a product cyclical company and more of a recurring revenue story? That's a possibility, and if that's the case, it should trade at a higher premium. And then the other thing is, like, is this company entering its Apple era or its iPhone era where, you know, Switch is their product? They make Switches now, and they're making it very clear, this is our business model going forward. Sony makes PlayStations, Microsoft makes Xbox, Nintendo makes Switches. In that world, it's like, even if Switch 2 disappoints you in any way, there's a Switch 3 coming. That's the thing. It's like, the companies become more predictable. And I don't mean that in like a negative way. I think it's actually a good thing for the street. It's a good thing for Wall Street when they can predict movements in the stock or you know, or at least for institutions, knowing that Nintendo is a stable company that's not going to bet the farm on something like a Wii U, which they didn't bet the farm. And that's what makes them so great, is that they don't ever bet the farm. They don't ever risk the company. They don't bet the company on things. Now with Switch, they were close. If things didn't work out for Switch, it could have gone sideways, but at the time they had $8 billion in cash on hand, and yeah, I think Nintendo's done a really good job of managing this last generation, squeezing every dollar they could out of it. But yeah, we'll have to wait and see what happens. I'm not going to tell people to buy or sell ahead of this event. And it's also, use your gut. If you want to buy, like, if you want to own Nintendo, this morning was a good opportunity, in my opinion. Being able to buy it below 17 a share, when it was trading almost at 20. It traded for as high as, where was it? I thought it was almost 1980 a share. 1946 a share. I thought it got to 1980. Anyway, it's possible that this thing's going higher. You know what? Let's get our... Do I have my drawings? Where's my drawings? Did I erase my drawings? Or is it something that only show up on a longer term chart? There we go. So we got a long way to go down to this old-ass Nintendo Switch uptrend. This is the trend that's been in place since Nintendo Switch launched. We bounced right off of it the year that the Mario movie came out, and we kind of haven't looked back. So we're definitely on this other side of it. So if you look at the higher highs, I've extrapolated this on a couple other charts. If you want to hear a crazy price target that's just based on technicals, I think the Nintendo stock could go to $24 a share in the near term. But if things get really bad, I do think it's going to test this uptrend, which is right around $12 right now. So you got $4 of downside and maybe $8, $7 of upside, in my opinion, just based on the chart. And you have that monthly, you have an inside month. So you should pay attention to this. Once again, it's a buy above 1908 per share. It's a sell below 1656 per share. And that previous all-time high for a frame of reference was 1651 per share. So is this area, is it going to prove to be support? We only will know after the news comes out. I do think like the stock was really running ahead of the news, but now it's sold off. You know, it's down about 8% on the month. Still up 70% on the year. But, you know, down 7.59% on the month. I feel like some of the hype has come out of the stock. And a lot of that has to do with tariff fears. So this is really where we get to find out like how well is Nintendo executing. And I'm curious to see if they maybe they've figured out a place to manufacture that would avoid some of these tariffs, or maybe they're, you know, we'll have to wait and see how they're going to execute. But this news about the Chinese, Japanese, and Korean alliance against America is not great, and that may spur some retaliatory policy moves across the world. I was looking at the CNBC news. Yeah, I don't think there's a whole lot. There's not a whole lot of information on what's going to happen with these trade deals. Historically, Trump has backed away from almost everything he's done, or he's weakened everything he's done. But whatever, it's called Liberation Day or something on April 2nd. Like, Nintendo, like, I don't know why they chose that day, but the day that the trade war escalates is the day of the Nintendo Direct. Do with that information what you will. I'm getting LinkedIn notifications on my wrist. I think Trump should fear Mario. Yeah, playing Monopoly and trying to be the art of the deal guy, but you're attacking our closest allies, our trade partners, our neighbors, is insane. The rhetoric that he keeps using about taking over Canada and making it the 51st state, taking over Greenland, that's also insane. I don't think the government should be run like a company. But what do I know? I suck at running companies. I lose money. Speaking of which, what do you think about the theory that the forced recession allows his friends to buy up huge numbers of assets again? Duh. Of course that's part of it. Forget the buying up shit, Scanner. He's telling them, hey, short the market today. I'm going to announce something that's going to make the market crash. And they're like, cool, bro. They all go short the market. And then he comes out and he's like, look, guys, the market's down a lot. I'm going to say something that kind of pulls back what I just said a little bit. They're like, cool, bro. So they all cover and then they buy calls. Yeah, dude. They're definitely manipulating the market. They're definitely manipulating the market for their own benefit. 100% what's happening. No doubt in my mind. Like, yeah. It's I don't think it's just a forced recession for his friends though, man. The recession being forced is to force the Federal Reserve's hand because Trump wants them to lower interest rates. And they have a dual mandate. Maximum employment and inflation that runs around 2%. So if he starts a recession, you're going to see a deflationary environment where assets start to go down in value, commodities go down in value, which, yeah, a forced recession would allow his oil buddies to buy oil for cheaper. It'd allow his tech company buddies to buy other tech companies for cheaper. That's 100% what he's doing. My concern is that he's causing a it's real, man. It's real. These are very corrupt people. I was talking to one of my friends about this. Like, have you ever seen the show 24? This is like the lamest season of 24 ever. It's like, yes, politicians are corrupt. Yes, they're manipulating. But this is like the worst season of 24 ever is what we're in. And it just sucks. Because every day it's just another stupid headline out of Donald Trump. But yeah, it sucks. Because, like, fundamentally nothing is wrong with Nintendo. Yeah, they face very tough generation over generation comparisons, but year over year they don't. But it's like you can't analyze a single stock in the market right now without factoring in Trump's policies. And that's what sucks about this market. Yeah, since we're talking about all this shit, we should probably look at volatility. Interesting. Double inside month in volatility. Oh, boy. Potential rev strat quarter on the VIX. So below 1458, that would be a sell signal on the VIX, would be a buy signal on the market. Above 2957, all bets are off. Things could get really nutty. But yeah, the volatility index, something to pay attention to. Let's see what the monthly looks like. Yeah, inside month with a potential rev strat to the downside. So the rev strat here on the monthly chart would be in effect below 1697. So that kind of shows you how it could cascade, right? You have a sell signal in the VIX on the monthly chart, but then it expands, and then you have one on the quarterly chart. And then you have two sell signals, and then the computers get even more excited about that. But yeah, Donald Trump is volatility incarnate, so I'm not excited about trying to short the VIX here. I wouldn't. But, you know, it has had a pretty sizable run. It was at 17 on the 26th, and it hit as high as almost 25 today. At some point, we're going to get at least a near-term washout of stocks. I just don't think that headline is crossed yet. Whatever exactly that headline will be that causes the the mass liquidation of stocks. But yeah, I would just be careful here. I don't think this is not a time to create new positions. It's just frustrating because there is a stock I've been watching and I talked about on the show, and I want to own it, and that's a TKO. It's not staying inside quarter. I want to own this stock before WrestleMania. So by the time this next episode comes out on April 30th, actually, let's see. When is the next episode? It would be, Wednesday, April 30th. Oh, that's better than on a Monday, at least. Yeah. Hopefully by then, I will own TKO. I'm probably going to be selling my Teladoc to buy TKO. I think they're executing very well. If you've seen they were in London. I think they're in London today for Raw. But they're also in London for SmackDown on Saturday. The explosion of the WWE brand across the world right now is really something to watch. I think they got a lot of revenue ahead of them. One of their board members or former board members is now in charge of the Department of Education. Shedding Vince was a great thing. Getting the McMahons out in general was a good thing. I think The Rock being there is great. This John Cena's farewell tour is really good. But yeah, their premium live events are solid. Yeah, I think very cool things ahead for that company. And also it's like a play on Idiocracy, right? Maybe I should buy Carl's Jr. stock too. Let's see. We should probably talk about Ubisoft before I get going. Outside week to the downside to start the week. That's a big ass outside bar. So they announced that they're spinning off a bunch of their IP into a new company that Tencent invested 25% at. They bought 25% of a subsidiary for $1 billion. That means they're valuing Ubisoft, the subsidiary, more than the stock. Like more than the sum of the parts. So this is where my spidey senses really begin to tingle, guys. You're valuing your company at 1.5 billion euros. What is that in dollars? Euro to USD. $1 is 92. Just give me a good currency converter. There we go. 1.5. That's 1.62 billion is what they're valuing Ubisoft stock at right now. Oh man, dude. Scanner, you're speaking my language, man. I was talking to Bill about some kind of sports programming on this channel. We've been talking about it. I know Donovan had mentioned in the past. Like, they have Pop Goes the Culture every Thursday or whenever they can on Thursday. And I love that show. And I think sports are part of culture. So sometimes I will inject a sports story or two. I try to talk about music there a little bit. I try to talk about comedy there. But I do think that we have enough people, enough viewers, and just enough passion about sports where we could do some sports programming. And that would include something like sports entertainment. Or pro wrestling. But yeah, I can't stop looking at this Ubisoft chart, guys. There's something wrong with me. Something wrong with me, man. No normal people would just sit here and stare at this chart, but like, look at it. That's a turd. That's a turd right there. If this stock doesn't go to zero, this is a buying opportunity. Categorically. It has to be. Because now, I know it's a tragedy in one part, and I know that like some of their things, like maybe they'll never ever get back to where they were, but they're at these prices, you really have to ask yourself: is Ubisoft doomed? They just raised $1 billion. And they just proved that, like, 3 franchises were being valued at $4 billion, and their stock's only at $1.6 billion. It's like something doesn't add up here, is what I'm getting at. Just buy one share and calm myself. One share for one share for $2.37. Yeah, I don't do that. Maybe I'll buy 1,000 shares. But Lucci, the other problem is, deep down, I know that I own a better stock. I would rather own Nintendo than Ubisoft. That's what it boils down to. I would rather own Nvidia than Ubisoft. I'd rather own TKO than Ubisoft. Because, like, nothing they have done has inspired confidence in me. Like, I'm sorry, I don't want to talk about the devs. I'm talking about management when I say that. Nothing about management at Ubisoft has spurred confidence from me. Now, Assassin's Creed selling well? Lucci, I know, man. Don't put all your eggs in one basket. What if the basket's fucking awesome? What's the best basket? Because, I don't know. Let's take a look at this basket again. Let's take a look at this basket. Ubisoft, down 12% on the year. Nintendo, up 17% on the year. Well, I'd rather be in this basket than any of those shit baskets. I'd rather be in Take-Two. Take-Two's up 13%. But yeah, like the person who bought Shacknews, who likes to look for distressed assets, I can't help but ignore Ubisoft stock here. I just can't. But it does have a potential sell signal to the downside. So the trade inside quarter set up a reversal. It actually is an outside bar. Oh no, sorry. Yeah, outside bar. So you have a new risk range. You have a buy signal above this last quarter's high of 335 and a sell signal below 217. It's getting priced like a stock option at this point. Anyway, it's an area of intense interest for me. But yeah, like, I do look at things like that though, Lucci. It's like opportunity costs. Like, what else could I do with that money? And I don't know if it's the right gamble at this point. Well, it's undeniably in the gutter. Like, just look at that. If this stock doesn't go to zero, it's got to be closer to the bottom than the high. It has to. Just by definition of where it is right now, it has to be closer to the high than the low. But yeah, it's just a mess. It's a very messy balance sheet. They're even trading at a discount to their own book value right now. That's weird. They don't make money. They're losing money. They need to stop losing money. But they have enough cash on hand to fulfill their debt obligations. It's not. Yeah, I don't know. One of these days, I will buy Ubisoft stock. That day is not today. But maybe it'll be later this week. Who knows? Maybe Nintendo shows off something I'm disgusted by, and I sell all my Nintendo stock, and then I'm like, hey, forget what I said on Monday. But I don't really think so. I think Nintendo's really set up for an interesting launch year for Switch, and then the second year for Switch. Switch 2. I think are both interesting opportunities. But yeah, we have an inside month cooking here on Nintendo. So below 1656, that's your sell signal, and above 1908 is your buy signal. And just for frame of reference, 1947 is the all-time high. Tom Nook OnlyFans. I mean, yeah. I think they're going to have a camera attachment, and it's going to be part of their new social effort. Like, there's going to be I think Miiverse returns. I don't know if they call it Miiverse, but I think some kind of Miiverse will return. And I think, yeah, we're gonna have some. Like, imagine if they did something like kind of Snapchat filter that turned you into Mario's face, and then everyone could just be Mario VTubers or Princess Peach VTubers. I could just. It seems silly enough for Nintendo to do that, and it's optional. Like, it won't increase the price of the system, right, by not putting the camera on the system. This is all born out of the whole 2 USB port thing. But yeah, I have a feeling that the C button on the Switch 2 stands for camera, and that there's going to be some sort of AR camera component to this ecosystem. And it'll be even harder to find the camera than it is the system. But yeah, those are some of my crazy thoughts on that topic. Any other stock charts you guys want me to look at? I know it's coming up on the hour. These shows tend to be about an hour 30 long. I should probably talk about GameStop, huh? This stock blows. Just as GameStop was squeezing last week, Ryan Cohen showed up with another round of dilution. They now have $6 billion in cash and no idea what they're doing. So yeah, this stock, they want to act like it's about to break out or something. No, you're still inside of the year 2021. You never got out of this range. Traded inside year in 22, went down below it, only to come back inside in 23, broke out above that high in 24, got all the way up to $64, only to be fucked repeatedly by Ryan Cohen. And now we're back down here at $22. I guess what I'm getting at is, like, I don't see any reason on the chart to own this stock. That's it went slightly outside on the upside here. Still trading inside of this big ass quarter from last year where they issued that dilution. You had a slight inside quarter and up buy signal followed by this, so it's just kind of sitting there. Outside month, so you have a sell signal below this March low of $20.73 and a buy signal above $29.80. Yeah. Yeah. Okay. Any other stocks you guys want me to look at before I go? But yeah, an outside month in GameStop that you can watch. So those 4 possible outcomes are still there. In case you're wondering, GoPro's still in the toilet. I don't know if they're going to make it, you guys. I don't think so. And I did exit my iRobot position. They issued a statement saying that they're probably going to go bankrupt. This was a stock that almost got acquired by Amazon and then has since fallen off a cliff entirely. I don't understand why the EU thought this was an anti-competitive deal if the company was on the verge of bankruptcy. I don't think that they were an antitrust concern. But this is an example of when regulation kills a company. It's unfortunate. I lost about 60%. I didn't have a whole lot. It was a speculative position, and it did not work. Which kind of goes back to my point about I'd rather just own Nintendo. I own 3 stocks in any size right now. I still have some options on GameStop that will likely expire worthless. Not put options. And then, yeah, I'm looking at this Teladoc position. I may be selling it to buy something else with it. You had an outside bar to the downside last month. The quarterly chart, outside quarter. Yeah, T-Doc's looking rough. Obviously down on the year. So yeah, all eyes on Nintendo, right? I think that's basically where I'll leave it. Just a real quick pat on my own back, because this is the end of the era. This is the end of the Nintendo Switch era, right? The beginning of the Switch 2 era. I got it right. I bought it. I bought it basically all throughout this period, from 2010 all the way through 2017 or 2016. And yeah, I'm up about 200 to 300% based on the different lot sizes that I bought it at. If you joined me for the ride, maybe take half off. If you want to diversify, or if you're worried about tariffs, you can take some profits. But I think the long run is very good for Nintendo. With the movies, with the amusement parks, with this continuity of the eShop, with whatever quirky thing they're about to announce. I just think they're one of the most interesting companies in the world. I think they have valuable brands and IP, and they're finally understanding how to monetize that stuff. And they made F-Zero 99, which is my favorite video game. So, yes, I let that inform my investing decisions too. So yeah, I think that's gonna do it. No one has any questions in the chat. I think I can just be on with my day. I got a dev meeting here in about an hour and a half, so I'm gonna get out of here. But thanks for watching. Thanks, Scanner, Lucci, TJ, Donovan, who asked about Nintendo and then left. Oh, we launched this product. It's a website called Shack Maps, Lucci. We launched it a week ago, so we're just gonna have our first week since we launched. Look at like the postmortem of launch, what bugs we're still fixing. Yeah, I really like the website. I think it's cool. I don't even know if we have like a promoted. I don't think we have like a exclamation point Shack Maps yet, but that's the website, and it's free, and we're going to put all sorts of interactive game maps on there, Lucci. It's pretty cool stuff. Yeah. But yeah, there's all the other I don't know, YouTube. We got places to go. I never remember if it's social or socials, but I think it's socials. Nope, I'm wrong. There we go. Yeah, all those places. We're on Blue Sky because that's apparently a place to go now. Yeah, we're on TikTok for now. And yeah, that'll do it for the show. As always, I remind people at home to manage their risk. This is an incredibly risky time. If you're not able to sleep at night because of your positions, you should probably sell some or cover or whatever. Yeah, this is I just stress, don't be a hero in this market, because you don't control the news cycle right now. You can analyze companies, you can invest in them accordingly, you can take advantage of panic moments. Like, this is a good time to put together a shopping list. Unfortunately, my shopping list is only 3 stocks, and I own 2 of them. So, I'm not buying the stocks that I already own, but I am watching, like in the case of Nvidia, maybe I'll add to it if it drops below 100 or something. But then it's like, why did it drop below 100, right? You can't just say these things without, I need context for why we got where we're going. So right now, I'm not super bearish because I don't own a lot of these stocks that are getting killed. But I'm also not super bullish because I don't own any of these stocks that are getting killed, and I don't even want to buy them. Like, I'm not even talking about buying Microsoft or Apple or Google or Amazon. Like, I'm not even talking about it. So we're nowhere near like an actual buyable bottom. But I do think that Donald Trump is manipulating the stock market with these headlines, and he'll continue to do that. And that's why you can't get aggressively short either. Because he can just go, oh, I changed my mind, and then the market rips higher. So you just got to be careful out there on both sides. That's what I'm saying. Don't be a hero. Don't think that you're smarter than the shorts. Don't think you can outsmart the shorts, and don't think you can outsmart the market by just buying great companies. Like, you could have bought Apple every day in 2008 and made a fortune, but all of 2008 you would have felt like a complete idiot because the stock just kept going down and down and down and down. So timing is really important here. But like, there's nothing wrong with sitting on cash, having a watch list, and waiting for evidence that this sell-off, this bear market, this correction, this recession, this depression, whatever it turns into, wait until it's over. Because that cash, like, you don't need to be a hero. It's like, oh, you were down 30% before you were up 30%? The bank doesn't care when you deposit your money. They're like, did this come from a Nintendo capital gain or a Tesla? No, they don't care. It's just money. It's just a way to make money. So give yourself the best opportunity to make money by being patient and waiting for your pitch. It's the number one thing I just want to stress to people before I sign off. But yeah, thanks for watching. Keep it locked on Shacknews. We're going to be covering the Nintendo Direct for the Switch 2 release on Wednesday. So I know that there's going to be a stream or something on that day here. Obviously, we got Steve Tendo tonight. We got TJ's was streaming City of the Wolves. We got Sam streaming. All sorts of great streams coming up this week. That'll do it for me. Thanks for watching. Manage your risk. And don't be a hero in this market. See you next time on April 30th, which will be a Wednesday. Bye-bye.